The AI race has a brand new competitor out of China called DeepSeek, which came out of nowhere, but investors are worried that DeepSeek could be the needle that pops the AI bubble in the United States.
AI stocks just took a hit, and a mysterious new AI from China is shaking up the entire market. DeepSeek claims it's faster, smarter, and cheaper than ChatGPT. But is that even true, or is this just another tech hype train heading straight for the AI bubble burst? This is FinanceBuffs, and today we're breaking down the wild AI race, the DeepSeek controversy, and what this means for you as an investor. Buckle up, because today we're checking out Jaspreet Singh from Minority Mindset and react to what he has to say.
The AI race has a brand new competitor out of China called DeepSeek, which came out of nowhere, but investors are worried that DeepSeek could be the needle that pops the AI bubble in the United States.
Wait, hold up. DeepSeek just came out of nowhere and dethroned ChatGPT as the #1 AI app? The same ChatGPT that raised $6.6 billion in its latest round? Meanwhile, DeepSeek claims they only spent $5 million to train their model. Either they're AI wizards or something isn't adding up.
But according to DeepSeek's reports, it's faster, smarter, and cheaper. Now, the key is this data has not been verified yet, so you want to take it for what it's worth. But the thing that really caught investors' attention here is that DeepSeek says that they only spent $5 million to train their artificial intelligence.
DeepSeek claims they built an AI rival for pennies compared to OpenAI. But here's the catch. No third-party verification. That's like saying you built a Ferrari with pocket change, but nobody's allowed to check under the hood.
But the thing that has come out of this is that DeepSeek is now the #1 app on iOS and Android, so it has dethroned ChatGPT. And this has a lot of investors, of course, worried because they are a Chinese company. Now, the other interesting part about this is DeepSeek is kind of taking Uber's business model, because what Uber used to do, the ride-sharing service, is they would enter a new market, but then they would severely cut the prices of their services. That way, you didn't want to use a Lyft, you didn't want to use a taxi, Uber was just so much cheaper. Well, what DeepSeek is doing is they are an open source platform and they're completely free.
Free AI. That's an old school Uber strategy. Burn cash, wipe out competition, then jack up prices. But here's the real question. Can OpenAI afford to fight a price war? Or is this the beginning of an AI market collapse?
But if you're really ready for the icing on the cake here, the most interesting part about this is what the United States has been worried about. Throughout the last years, the United States put bans on companies in the United States from selling advanced semiconductor chips to China.
The idea behind banning semiconductor exports was simple: slow China down in the AI race. But here's the million-dollar question. Did it work? On one hand, limiting China's access to cutting-edge AI chips could slow their progress. AI models rely on high-performance chips, and the US wanted to protect its tech dominance. But on the other hand, DeepSeek just came out swinging. If China is producing top-tier AI models despite restrictions, doesn't that mean the ban failed?
Why? Because they did not want China to be able to compete in this AI race, in this technology race. Well, now here we are. And of course, we have seen some of the AI stocks fall pretty hard, like Nvidia fell by like 16% in just one day, which really, is not that much in the grand scheme of things because their stock is up almost 2,000% in the last 5 years.
Investors saw DeepSeek and started panic selling AI stocks. But if Nvidia is still up 2,000% over 5 years, is this even a crash or just a sale?
But it's something you want to pay attention to because a lot of investors are now concerned. Is the AI bubble potentially bursting? Now,
AI feels invincible right now, but so did the internet in 1999 before everything collapsed. Is history repeating itself? Or are we just being dramatic?
But the interesting thing here is this is now what the United States has been trying to fight against, because President Trump just recently announced that he is going to work on a joint venture to get up to $500 billion invested for infrastructure tied to artificial intelligence. This is a new partnership with OpenAI, remember the founder of ChatGPT, Oracle, and SoftBank.
$500 billion to fight off AI competition? That's like building a Death Star just to stop one spaceship.
Not just that, the fact that it's in China has more people concerned. And to make it even more interesting, ChatGPT says you have nothing to worry about. I went on to ChatGPT and I asked them if DeepSeek will beat ChatGPT in the AI race, and this is what ChatGPT had to say. Quote, DeepSeek won't, quote, beat, end quote, ChatGPT in the AI race overall, but it could become a leader in its specific domain. Both tools are likely to thrive in their respective areas, contributing to artificial intelligence's growth in different ways.
ChatGPT literally said DeepSeek won't beat me. I swear, AI beef is officially a thing now. Somebody cue up the diss tracks.
Now, we saw a lot of different companies hurt by this, including Bitcoin. But the thing that I want you to think about here is, what is this going to mean in terms of tariffs? What is this going to mean in terms of future innovation? And what is this going to mean in terms of our economy? Because artificial intelligence has been impacting our economy in many different ways. In one way, some companies have been letting people go and replacing them with artificial intelligence.
AI is either making companies more efficient or killing jobs, depending on who you ask. The real question is, are you adapting to AI or waiting to be replaced?
In a second way, many companies have been utilizing AI to make their workforce more efficient. And in the third way, we've been seeing a ton of money, investor dollars, being spent or invested into artificial intelligences because they're hoping for big returns, and they're hoping that AI technology can amplify the growth of many different companies.
On one hand, AI genuinely makes businesses more efficient. Companies are automating repetitive tasks, streamlining workflows, and cutting costs. That's real value. A factory using AI for predictive maintenance. That saves millions. A customer service chatbot replacing a call center? That's a massive expense reduction. But on the flip side, there's a lot of hype in AI investing right now. Companies are throwing billions at AI startups, hoping they'll strike gold. Sound familiar? It's exactly what happened in the dot-com bubble.
And the TikTok ban has been a negotiation tool now by the Trump administration to get China to sell TikTok to the United States in exchange for little to no tariffs. That's the discussion that we have going on today. Now you have to wonder, now that we have this DeepSeek concern going on, will President Trump lump in DeepSeek in this discussion?
The TikTok ban isn't just about data privacy. It's also a bargaining chip in US-China trade negotiations. If the US successfully pressures China to sell TikTok in exchange for lower tariffs, it sets a precedent. Tech companies can become negotiation tools in global politics. Now with DeepSeek in the mix, the question is, will it face the same scrutiny? If the US sees DeepSeek as a threat to AI dominance or data security, it could become another pawn in the trade war, potentially facing bans, restrictions, or pressure to relocate operations. The AI race just got political.
But one of the reasons why you saw Bitcoin prices fall out of concerns out of this faster AI is that if AI is growing this fast, then we could potentially be seeing quantum computing come sooner. Why is that a concern? Because some people have concerns that quantum computing could break blockchain, that could break Bitcoin.
Bitcoin's price drop highlights how AI advancements can shake up investor sentiment, but AI itself isn't the problem. The real fear is that quantum computing could eventually crack blockchain encryption, which would fundamentally change how crypto security works. However, this concern is largely speculative for now. Quantum computing is still in its early stages, and blockchain developers are already working on quantum-resistant encryption. The market reaction may be more about fear and uncertainty than an actual immediate threat. DeepSeek became the most downloaded AI app overnight, but let's be real. Are these real users, or are we looking at some good old-fashioned growth hacking with bots? Wouldn't be the first time a tech company faked adoption to grab attention. So, what did we just witness? DeepSeek is shaking up the AI race. The US is scrambling to maintain dominance. AI investments are skyrocketing. And now, we're even questioning Bitcoin's future because of potential quantum advancements. If this proves anything, it's that technology moves fast, and the markets react even faster. But here's the real question. Is AI a true revolution, or just another bubble waiting to burst? And if AI keeps evolving, how will it reshape entire industries, from crypto to finance? That's what you, as an investor, need to think about. And speaking of game-changing tech, what happens when AI gets so powerful that it starts making decisions on its own? Could we be heading into an era where AI controls entire industries? If that concerns you, you need to subscribe. Hit that bell, and I'll see you in the next one.